All right. Well, good morning to all. It's February 10th, 2025, and it's about 8:47 a.m. My name is Lauro Herrera, and I got one of our new associates, Mr. Keith. And Keith is new to our platform, but he's definitely been in the final expense telesales space, for several months, maybe years. And he's decided to team up with us exclusively here at Senior Life. And with that said, good morning, Keith. Thank you for joining us. And
Hey, thank you for having me.
and to everybody that's listening, I've asked Keith if I can record this little training session with him. So that way all of you guys that come to my channel get to learn more about final expense telesales. A lot of you guys do business with me and my partner Jody on the lead side. In fact, that's how our relationship started with Keith, is that he was originally our customer buying final expense leads. So whoever, whether you're a client, whether you're just somebody that watches our content, this is for you. You know, our focus, was to focus exclusively on senior life, especially when we had the one-to-one compliance that for now has been postponed until further notice. But our focus was to provide our product of senior life and the service of senior life. And we've kept that, considering what TCPA did, we've kept with that focus. And Mr. Keith is also in agreement with that, and he's also focused on providing senior life as our only product. So in this particular example, I'm going to share with all of you guys a little bit more in-depth training on senior life's compensation. And this is going to be the good, the bad, and the ugly. Because at the end of the day, agents like Keith and for all of you guys that come and watch my content, we want to be as transparent as possible with you so you know exactly where your money is at all times. Does that make sense, Keith? Because in most cases, when people have disagreements in relationships, it's not always at the beginning, right? You get to meet somebody, you like their platform, and everything's great. But sometime down the road, right? A month down the road, a year down the road, 2 years down the road, certain things in communications don't work. And you have breakage in communication. And at any time it has to do with money, we can all agree that it's not always a good thing. So for all of you guys watching today, I'm going to break down exactly how compensation works. Now, this contract that you see here is not Keith's contract, but we're going to use it as an example to share with everybody how it works. Okay. But with that said, let's get started. So, again, where is the money? And when you're selling for one company, one product, it's important that you know exactly where the money's coming from. And in this particular training, we're going to go over a contract of 100%, 120%. So in this case, Keith, contract is 120%, even though that's not the contract he has. But for this training, we're going to use this. And for anybody that's watching, the only way you're going to be able to get a contract of 120% or more is if you got documentation on your production. And not only that, but I also want to see your non-taken ratios as well as your persistency. Because it's very common to see agents when they go to a new agency or carrier and they're on the leaderboard across the board, but all they're doing is replacing. And I've seen it over and over again. Again, here we're going to focus on exactly what you're getting paid for and on the business that you're generating. So 120%, super preferred. You get 120%, ages 40 through 80. Now, the value added product, this is our legacy assurance key. Now, if you don't add this into your premiums, then you're going to lose a percentage of your commission. And you'll lose it here. All other, 0 to 85, it goes to 90%. You see that?
Yes.
So the value added product, in this case, legacy assurance, which is the funeral concierge service, plus all the other goodies, is a $4 a month membership per household. Senior Life System includes it into every single one of the quotes. Okay, but in the event, very rarely you get somebody that does not want to add it on there. This is what your commission schedule will look like. And for all of you guys listening, very rarely do I have someone fighting me on this legacy membership, because the value, it really is beyond measure. My retention rate at Senior Life has been the highest out of all the carriers because of this reason. And again, for all of you guys that are new, here are the renewal rates. So from year 2 to year 5, 5.25, year 6 through year 10, 3.25, and anything over that is 1.75. And then here is something that Senior Life has, which is a 4-month 100% chargeback period. And we'll get to that here in a couple seconds. Now, preferred whole life, 40 to 80 years of age, 120. Ages 0 to 39, ages 81 to 85, you're getting 90. All other, meaning they did not buy the legacy membership, you're getting what? 90%, correct? So look at the renewals here. And again, some people will say, man, well, why is Senior Life punishing me if I don't, want to add that legacy membership? The reality is that they believe so much in this product because of what it does for retention. This is how they incentivize us to do what? To add it. And for me, having this legacy product for, over 10 years, in fact, I was one of the original guys that rolled this out. It is just, amazing. Because what it does for your retention, again, is beyond measure. Because what good is it if the policy doesn't stay paying, right? And here is the website of all the benefits that they get. So they get to lock in the merchandise. And at today, they get a 50% discount roughly today. And then imagine in the future. So the value is tremendous. Standard, even though on this schedule right here, Keith, it says 100, a couple months ago, they increased that. So now it's 120. Does that make sense? So now super preferred, and standard. These are day one coverage policies. As long as they're within 40 and 80 years of age, you're going to collect how much? 80%, 120% of that business. Okay. And again, the age breakdown. Now we follow up on the limited benefits. These are people with under, rated health, right? They're dealing with health issues. You're going to deal with modified, easy issue, and guaranteed issue. Now, modified pays ages 40 to 80, 90%. Ages 0 to 39, 81 to 85, 60%. And if they don't enroll into the legacy, 60%, all ages. And you get renewals with modified. Easy issue, 65. Guaranteed issue, 65. So the reason I'm explaining this to all of you guys out there is that a lot of agency owners, when they give you a compensation number, they're not breaking it down in this manner. So how much money are you making for every sale that you do? Well, every case is different, correct, Keith? Because it could be a preferred, it could be a limited policy, right? But let
Right.
me tell you something to help you, Keith, with your math. Out of every 10 cases, how many of those would you say, in your experience, Keith, on the companies that you've worked with, would have ended up guaranteed issue, a 2-year waiting period, or any kind of limitations? How many would you say out of those 10 applications would have been in that category? How many would you say?
Maybe about 30%.
Okay, 30%. And that's a very good number. But I would like to be conservative with you. And I would say 40% is going to come back with guaranteed issue status, 2-year waiting status. So 4 cases out of every 10 that you submit is going to be what? In this category. Modified, easy issue, whole life. Well, let's go ahead and say that those 4 cases, okay? Let's go ahead and say 1 was modified. And then we got 1 for guaranteed issue at 65, another 1 for guaranteed issue, and then I'll do another modified. Yeah, you okay with that? And we'll divide that times 4. So 77% average, right? If that's the mix in those 4. You with me?
Yep.
Now the other 6 are 120. Right? Plus 77 plus 77 plus 77 plus 77. That gives us a new number, and divided times 10. That right there is what your average first year compensation would look like with that mix. Is it safe to say?
It sounds right.
So if out of every 10 cases, 6 of them you get paid 120, 120, 120, 120, and then 4 cases you got an average of 77% based on a mix of 2 modifieds, an easy issue, and a guaranteed issue, then that means that on average, every time you submit an application to Senior Life, you're going to average 100%, 102% first year before you get an advance. It'd be safe to say based on that mix. Are you with me?
I am.
Okay. Now, to all you guys watching, now let's talk and look at the agent manual. Now, I want you to go to page number 5, plans and riders. And this is the beauty of Senior Life. And that is there's no MIB checks, no third-party interviewer. You, Keith, you're the guy that's going to make the call here for Senior Life. Super preferred whole life. This product is offered to people ages 0 to 85 who have no health issues and who have not used tobacco or nicotine products in the past 5 years, with face amounts of 5 to 30,000. Due to the preferred class of risk, the following also apply. Only 1 medication per condition accepted. Wow. So minimum 5,000, maximum 30,000. The caveat is only one medication per condition. So as the underwriter, your job is to make sure that you meet these requirements. The one medication per condition is the big flag. Preferred whole life. This product is offered to people ages 0 to 85 with minor health issues and who have not used tobacco or nicotine product in the past 12 months, with face amounts ranging from 1,000 to 20,000. Medication count don't mean anything here, unless you're dealing with what? Some medications like Paxil, Plavix, isosorbide, blood thinners of it, warfarin. But other than that, it's good. Standard whole life. This is the most popular product, 0 to 85, 1,000 to 20,000. Doesn't matter if they smoke. So you're going to capture a whole lot of people with these products here. You see that? At 120%. Now let's look at the limited benefits. Modified. We sell this product to people who have moderate health condition. This limited benefit plan features a return of premium plus 10% during the first 2 years of coverage, and then the full face amount in third year and thereafter. We offer this product to people ages 0 to 85 with a face amount of $1,000 to $15,000. A lot of people go with modified 2-year waiting periods. Easy issue, 2 health questions, 0 to 85. $1,000 to $10,000. Only 2 health questions. Guaranteed issue, no health questions. So it's important for you to understand the differences between these 3 policies, right? Because sometimes agents just become lazy and they just go for guaranteed issue because, hey, no health questions. But 3-year waiting periods compared to a 2-year waiting period, just by asking a couple more extra questions and doing the underwriting correctly, you're going to be able to place them with a modified instead of a guaranteed issue or an easy issue. And if you notice, easy issue pays no renewals. You see that? So it is absolutely important that you, when you do your underwriting, that you understand the difference between a modified, easy issue and guaranteed issue, because look at the compensation here. You get 30% more by doing a little bit better work in the underwriting. Okay. Now let's go to compensation, Keith. This is very important because anytime people have problems or they're upset, it always has to do with their money. Now with Senior Life, they advance you on pieces of business. And here is the advanced commissions. Okay, as you know, these are loans made against future earned commissions. So it's important that all new business must be received by the established new business deadline. Live checks dated no more than 30 days from the application date will be accepted, but coverage will not be affected nor advance made until the live check is received, processed, and the policy is issued. Initial withdrawal applications cannot be processed until 3 days after the initial withdrawn date and the policy is issued. And the advance amount is limited to $700 for applications of any one payer, insured owner, or household. Now, this $700 has recently, and they have increased that to $1,000. Okay. Now, also want to let you know, Keith, that Senior Life does not pay advances or commissions on the policy fee. And a policy fee every month is about $3.50, $3.25 roughly. We don't get paid on the policy fee. And also, we do not get paid a commission on the $4 membership fee to Legacy Assurance. Now, Business that's paid as earned. This is very important. Initial premium non-sufficient 2 or more times. I had a few of those happen to me in the last 2 weeks. You know, the third time it went through, but I didn't get an advance. Hey, it is what it is. Previous lapse or cancel policy or multiple NSF application. I also had one of these. They previously bought a policy through Senior Life. They lapsed. I did not get an advance. Business initiated using a credit or debit card. Direct Express is very common out there, right? Always do your best to get that checking account, routing number. But hey, man, if at the end of the day, the person needs the coverage, they want the policy, I'll take the credit card payment, but you get paid as earned. Does that make sense? The as earned part?
It does.
Okay.
Yes.
New accounts, disconnected phone numbers, no phone service, controlled business, family, friends, associates. That's not going to get you an advance. You get paid every time they make a premium payment. You get your 120% or whatever your commission structure says. Pay are not a part of the application nor named beneficiary, except if husband and wife. In business, we believe will not stay on the books. Second, monthly pay through and renewal commissions. Again, the biggest problem with insurance agents, at first, everything sounds great, but over time and after several policies on the books, you want to know where your money's at because your effort and everything. So monthly pay through and renewal commission. Now, this is where you need to pay very close attention because this is your money. The portion of your first year commission that is not advanced is paid on a monthly basis after the advance has been earned. Depending on your advance percentage, the remaining first year commission paid through will be earned during the 7th through 12th months of the policy's duration. Pay through and any as earned commissions will be paid to those with current new business by the 10th day of each month after any chargebacks or expenses are deducted, not applicable to 75%. Okay. For applicable business, monthly renewal commissions may begin to pay out to you beginning the 13th month of the policy's duration. Established persistency requirements must be met to qualify for renewal commissions. No matter what insurance company you work for, if your retention falls under the company standards, you're typically going to lose your renewals if they don't terminate you. Okay. So every single month on the 10th or before that, you will receive all of this compensation. Are we in agreement? So here we go to the calculator again, okay? So we agreed that the average, so if you submitted $10,000 worth of annualized premium, okay, times what we looked at, 102%, right? Average. So you got 10,000 times, let's see, 100 and times 100%, that's 10,000. Then you get 75%. That's 7,500. The difference between 7,500 of what they advance to you and what they owe you is what? $2,500, right?
Right.
This 2,500, they're going to pay it to you once they earn the commissions back. Then they're going to start paying you that every single month on the 10th of every month. So you would see that obviously, you know, divided up over the next 6 through 12 months in that first year. All right. Now, chargeback system. Senior Life Insurance Company utilizes a 4-month, 100% chargeback system. This means that all earned and unearned commissions will be charged back if a policy lapses, cancels, or rescinds within the period stated in the commission schedule. Also, all limited benefit plans carry a 100% chargeback if the insured's death occurs during the first policy year. The 100% chargeback is applied according to the chargeback repayment system. Does this make sense, Keith?
It does, yes.
Okay, so to all of you guys out there, not all insurance companies, but a big group of insurance companies have chargeback systems like this. So what does that mean? So let's say, for example, Keith received the $7,500 advance for that $10,000. And this is what he got deposited, $7,500. And let's say 4 months down the road, they all canceled. Okay, they all canceled. Well, the customers paid 4 months of premiums. So the insurance carrier collected 4 months of premiums, and then they all canceled. But you owe the insurance company how much? $7,500. Even though they collected 4 months of premiums. So now that you owe them, that becomes now a negative against you. Sounds bad, but that's the way it works. Also, all limited benefit plans carry a 100% chargeback if the insured's death occurs during the first policy year. The 100% chargeback is applied according to the chargeback repayment system elected. So now you understand that chargeback, right? Now we're going to talk about the repayment of that chargeback. The default option is the back-end system, which nets chargebacks amounts against pay-through and as-earned commissions during month-end processing, maximum advance of 60%. So you see people out there saying, hey, Senior Life doesn't take out no chargebacks out of your check. This is what they mean. But every single month, on the 10th of every month, you're paying for your chargebacks, right? But you're not paying it out of your submitted business. The other option, and this is the one you're on, I'm on, and all of my agents are on, is the immediate system, which is a maximum of 75% advance, which nets chargeback amounts out of the next advance commission. Are you with me? So
Yes.
now let's look at that a little bit closer. So let's say you got $7,500 advanced, and that meant that represented the 60%, which is 6 months. 7,500, we divide that times 6 months. That's 1,200 each month. And they paid for 4 months. So the insurance company recovered $5,000 of the 7,500 that they advanced you. All right. So now $5,000 is in the negative against you. That right now is now sitting here on the back end waiting for you. Here is the back end system. On the back end system, now you got 5,000 sitting there waiting for you. Senior Life recovered $5,000 of the 7,500 they advanced you, right? But you owe $5,000. Okay, and it's sitting there on the back end. Month 1, month 2, month 3, month 4, month 5, month 6, In month 6, you maybe start paying this balance down a little bit. But at this rate, if you don't have your chargebacks under control, your persistency under control, what is happening here on this 4-month chargeback? It's creating a big negative for you, ain't it?
Yeah.
Now, on the other hand, what happens after 4 months? So let's say Miss Jones, okay, so it's $1,250. Now let's say they cancel 5 months in. Now it's 6,250, and they cancel 5 months in. Now what happens? Now this is your new chargeback because they canceled month 5. So 5 months in, they canceled. Senior Life recovered 6,250 of the 7,500 they advanced you, and they canceled. Now you owe them 1,250, but that's prorated on for what they didn't recover. That's what you owe them now. Okay? Super important. So you know where your money's at. Now, you're at a 75% advance. Okay, so now we're going to say this 7,500 is 9 months. Now we divide that times 9. So now it's 833. So what happens at 4 months? So 833 times 4, you're out 3,300, right? If they cancel at 4 months in, you owe them $3,300, even though Senior Life recovered that money. So they got that from the customer, and then the customer canceled on the 4th month. Now you owe them $3,300. Okay, but then they cancel on the 5th month. What's your new chargeback balance? Okay, so 833 times 5, that's 4,165 minus 7,500. Now this is your new prorated chargeback. Why? Because they fell off the book on month 5, not month 4. Now, why do I do it like this? Look, man, you're going to have to pay for your chargeback regardless. But I want to know where my business is at every time. So when that policy falls off the books and I see it on the next piece of business that I submit to Senior Life, it was a new piece of business. And, you know, there's the chargeback. Boom. I see the chargeback there and I know it's paid off. And then at the end of the month, when the pay-throughs start hitting and the renewals start hitting, I know exactly where my money's at, and I know where I'm in the negative with Senior Life, and I know where I'm at always. On the flip side, for all the reps that are taking the 60% commission schedule, and they're not being responsible with their chargebacks and looking at their reports every single month, what do you think is happening to that back end commission and the back end chargeback balance? What do you think happens after 6 months down the road?
It's just accumulating.
It's huge, right? Especially if their chargebacks are over, let's say they're over 20% of their business is falling off the books in the first 3 months. So it's very common to see people that you might have seen at Senior Life that they left or gone somewhere else. And some of the complaints that you see online is, I never saw my pay-through check. I never saw my renewals. Well, the reason is because 1, the chargebacks were out of hand, and 2, the negative that created against what they owed was huge. So it's going to take a year, 2 years, maybe 3 years before what? That account is so big that it offsets your average loss. That takes time. On the flip side, when you take a 75% advance up front You'll know what the chargeback is the next time you get paid. And I trust me, you're going to be on the phone trying to what? Save that business,
Right.
reverse that business, save that business, drop the premium, and get them back on the program. You're also going to know where your 4-month chargebacks is at. You're also going to know if it's prorated or if you had to pay the full chargeback back. Look about limited benefits, carry 100% chargeback. And look, like I told you, I was going to show you the good, the bad, and the ugly. Okay. And a lot of people won't do that. I just got to be real with you so you understand how your compensation works, because a lot of agency owners don't do this. And this goes to everybody that's listening. Right now, you're probably working for an agency and they got you on a contract and you're on 150%, 140%. But when you really do the math, like we did in this case, this 120%, when you combine the mix of guaranteed issue and modified, you know, his true number reduces, right, from that 120 to an average of about 100%. Now imagine to all of you guys out there that are on contracts that are less than, let's say, 100%. Well, when you average the mix of products, what is your true number? And all of this is important because you're buying leads, right? If you're buying leads with us, you know, you're taking 25 inbounds a week, you're closing 20% of those. Okay, 25. That's 5 applications at 77 each. That's 4,620. And hey, we said your average first year commission based on 120 first year in the mix is 103%. So we'll say 100%. And then you get advanced 75% once that policy is issued and paid. That's 3,400. And then 3,400 minus what is your, let's see, 3,400. I got my math wrong. Minus 1,125. That's your weekly net profit. You see that? This right here, Keith, is a realistic look at the way compensation should be when you're looking at not only senior life, but no matter the company you work for. And to all of you guys watching, I encourage you to read your agent manual, regardless of the insurance company you're working for. Understand your numbers. Understand exactly how you get compensated. With senior life, you know, they have a lot of great things that make up for some of the things that are not so great. One of the things that I realized with this chargeback system was that my retention at senior life has always been high. So I never had an issue with chargebacks or persistency problems at all. So I encourage you not to get discouraged when you see this, but embrace it and do your best that every single person that you have on the phone, you're underwriting them to the best of your abilities. And the way you do that is by making sure you understand every single one of your products. Does that make sense?
Absolutely.
So with that said, Keith, what are your thoughts now that we've broken down this whole compensation structure for you? Any questions you have?
No, just how you average the commissions with the, the different plans, then it actually, you can get up to 100%, depending on how many of each one you sell. So that definitely puts things in perspective where, you're selling one at 65, one at 90, one at 120, it's all going to average out to, where you want it to be, which is, 100 or better.
That's right. And sometimes agents, they never talk about those lower compensation products. They're only talking about the day one, the best comp they have. But again, you're dealing with underwriting. People that are calling in are not in perfect, athlete shape. They're dealing with issues. So obviously it's important. But I will tell you one thing, man. The whole package that Senior Life offers just creates a great experience for the customer. And with me selling insurance for Senior Life since 2011, I have never ever had a chargeback issue with Senior Life or retention issue with them. And I've been able to see firsthand how the retention works and how people just stay paying because of how it all ties in together. So again, I encourage you to read your agent manual, understand it from start to finish. So that way, every single month, you know exactly where your money's at. And you're not looking at me wondering, hey, man, you said, and you're pissed off because the money's not adding up, right? That right there is a problem that most people face. And it can be addressed by dealing with it right off the top. So I hope you appreciate this. And to all of you guys listening in, please take the time, understand your comp, understand your contracts, the good, the bad, and the ugly, because there's no such thing as a perfect company.